Rory, welcome back to Talk Energy. Thanks for coming on.
Thanks for having me back, Max.
It's been about 5 or 6 months. I can't remember the last time we talked, probably midway through last year. Obviously, last year was a roller coaster in the energy markets, particularly oil and natural gas. I mean, it's just been this, and by roller coaster, I mean that almost in a literal sense that we've gone to some extreme highs, or at least recent extreme highs. And then now it's gone down quite a bit. Oil is still hanging in there. Gas has had just a precipitous fall. I think it's something like 40 something percent in the last couple weeks. A lot of it weather driven, and then also just Europe just buying as much as they can and kind of being filled up to the brim here. But to talk about, and I wanted for this episode to just do basically a recap of last year. I mean, you always have tons of great insights, and your newsletter Commodity Context is fantastic for people that haven't checked that out or subscribed. You're just dropping knowledge all the time, very thoughtful, and just great analysis. So I think the easiest way to start and to open it up is just kind of like high level, do an open riff here on your thoughts of the themes of 2022, and then we'll dive into some of these individual topics.
Yeah, so I mean, thankfully for this, I just published yesterday my year in review. I called it Oil in 2022, There and Back Again, a barrel's tale, obviously a riff on The Hobbit here. Because it really was. I think it's we literally climbed up this mountain. We started the year sub 80 for Brent. All prices will be in Brent terms, so that's mostly what I follow right now. But just basically knock off $5 for WTI, and you're pretty much there for most of the year. So we started the year sub 80. Ended, on a closing basis, it reached a high of $128 a barrel in March, which is the highest level since the mega price spike of 2008. We hit another high in June, around kind of 125, 126. And then from there, it was basically almost a straight line down. Although it was kind of roller coastery, like you were saying, like we kind of went down and back up and then down. It was, lower lows all the way through the second half of the year. So what kind of happened? And in that piece, I identified or kind of pointed to what I think are kind of 5 big themes, and I should say oil-specific themes, because I mean, on top of all of this, there was also runaway inflation, central bank tightening, slowing global economies, et cetera. So there's the macro malaise, but I think I'll leave the macro guys to focus on that, and I'll focus on like the oil-specific things that hit oil either were entirely oil-related or were kind of outsized in their effect for oil. And I'm just going to pull this up here. Twitter account here. So the 5 big themes. At first, we had obviously Russia's invasion of Ukraine. We had Chinese demand and COVID zero. We had the U.S. SPR, the Strategic Petroleum Reserve release, which was by far the largest in history, and kind of sparked, in many ways, a complete reimagining of the role and purpose of the SPR. Fourth, we had what I called OPEC kind of like crash landing, coming back from its emergency and kind of pandemic support cut. And then finally, we had what I call, the refining industry's unbalanced barrel problem. So let's kind of go through each of those one at a time here. I'm actually just going to pull up my last report just so I can kind of follow along with my notes.
Before we get into you made an interesting comment around the macro malaise and the guys that focus on it. Sometimes it feels like the macro stuff can, and this is, more higher level and philosophical before we get into these detailed topics, but it seems like sometimes the macro can drive so much of sentiment and where things are going. How much of that do you think can be a driver and has been pulling crude down? I mean, just everybody saying we're in a recession or this big recession's coming. And, this is what happens to oil prices in a recession, regardless of what all those other 5 things that you just mentioned and what's happening at the fundamental level. How much of that sentiment and the traders that do care about these macro trends, how much do you think that moves things? Or is it just overplayed and just a lot of Twitter hype?
I'd say both. I mean, at the end of the day, crude is fundamentally a physical commodity, but it's also a financial asset. So you're always going to get financial or paper players kind of torquing crude one way or the other relative to let's call it its fair physical value. Right. That said, I don't think that, like, when people say like, oh, it went from like 130 to 75 because of speculation, I think that's wrong. So I think it's always going to be an interplay of both of them. So what we saw last year was, I actually think in many cases, the financial market ran ahead of physical tightness in the first half of the year. And I think, yes, on some levels, it ran back below where physical would have brought it in the second half of the year. But I think those are just kind of two sides of the same coin. I think that they call it the fair value trend or whatever you will, the physically or fundamentally determined price also improved through the first half of the year and then collapsed in the second half of the year. And you see that not just in the flat price, you see that in the shape of the futures curve. You see that in estimated supply and demand balances globally. And I think we talked about this when we last chatted a couple of months ago. And for all of basically almost the entirety of the second half of 2020 into 2021 and into the first quarter of 2022, global supply was about 1.5 to 2 million barrels a day, depending on the estimate, below demand. Inventories cratered globally at their fastest pace on record. This is like a very fundamentally bullish picture. And then you enter kind of, March or, April, May, June, and all of a sudden you get the absolute slam of, Chinese COVID zero policy, throttling back at demand, and all the estimates of global demand, you basically, supply and demand. So you get kind of like demand here and supply here. You're kind of going on, and all of a sudden demand crashes back into supply. And we actually ended up on an overall annual basis, on like the second half of the year, we were generally oversupplied in the market. So I do think that does support falling prices. You see by the fourth quarter, you had both the WTI and Brent curves dropping into contango, which means the shape of the curve dips down at the front. So you have discounts on spot prices versus next month or further down the curve. This is all indicative of weaker spot markets. You saw, if not, definitely inventory stopped falling globally. And in many cases actually started rising again. Not huge by any means, but rising. So I think when you had a year that, and this is kind of what I was, the title, there and back again. I think myself included, but a lot of industry observers, all the ingredients were there for a mega bull run in crude. People were talking 200. I thought that was entirely possible. When you had an expectation in March that you were going to lose 3 million barrels a day of Russian supply, you didn't think you were going to lose 2 million barrels a day of Chinese demand. Those two factors right there alone, that's a 5 million barrel a day swing in global balances. That's huge. Like that's a historic kind of outlook volatility. That alone would justify a massive boost to the upside in prices in the first half of the year. And when we missed it, of course, you're going to give all of that back, because not only is the market not super tight anymore, but in fact, in many cases, it's actually kind of, relatively looser. I think that's the same thing. And we can be a bit more structural and kind of go through one by one. But I think this is a lot of people criticized the Biden administration for the release of the SPR, given that for a big chunk of the release, markets were actually falling. But you have to remember, when it was initially decided in March and April of last year, we thought we were heading for this massive historic hole in the market, and we raced at record pace to these highest levels since 2008. I think that kind of environment really supports emergency action, particularly when you have that asset at your disposal. Now, I think the mistake the Biden administration made, and I think this comes down to not incompetence or maliciousness, but I think to the bureaucratic, not intransigence per se, but just bureaucratic frictions of deciding on a brand new policy, rolling it out, and then all of a sudden market conditions changing, and they're like, oh, we should really pull back on that. I think after that was decided upon, it was that was set and it was going. I think that was the issue, the fundamental problem with the SPR release, is that by the time you were actually releasing at max pace, the market was likely already oversupplied. I think in the future, my hope is that SPR policy will be more nimble and flexible to those realities. That might be asking a lot, but I think that's also why you do need, over time, if you really want the SPR to be this actual kind of true and beneficial market factor, it needs more independence from the White House and particularly from Congress. So I think that's a fundamental challenge. We'll see what that happens. But I think now, thankfully, we have seen, the next stage of the SPR, which is trying to refill it. We've the 3 million barrels scheduled for delivery in February. This is a pilot project. We're going to see how it works. But I think this is this next stage of how the SPR, or at least the Biden administration or people within it, imagine this kind of new phase of the SPR. But let's just say, rewind for a second and kind of go back to that list of 5. So
Sure.
you had, just to recap, like we had this massively bullish year, or at least the setup for it. U.S. shale production was underperforming. That's honestly what we were focused on at the beginning of the year, basically. Demand recovery out of the pandemic, and U.S. shale underperforming. That's kind of how we started the year. Then you entered, okay, well now maybe OPEC is going to run into capacity constraints. So that was another bullish factor. And then, oh wow, Russia invades Ukraine, and you have this massive assumption that you're going to lose a huge amount of Russian supply, both from explicit embargoes and kind of import bans, and then price caps and divestment of oilfield service contractors and everything else from Russia. And what we ended up getting, we got basically 1 month of 1 million barrel a day loss out of Russia in April. And then they bounced back to within a few 100,000 barrels of what they were producing beforehand. Yeah. So from a 3 million barrel a day loss to a 300,000 barrel a day loss, that's a huge swing. And I think that justifies the prices coming back down to earth. Now, entering this year, we're actually, and I kind of like the frame I had for the conclusion of the 2022 in review is many of those same factors are the exact same factors now we are digesting today, which is what's going to happen with Russia. Are we actually going to lose Russian supply now? We have seen the early indications that we could, that the post-December 5th price cap related sanctions on Russian shipping have theoretically begun to pinch more than we had seen over the previous months. I think the data I saw was that, month to month, December from November, Russian exports or seaborne exports dropped by like 400,000 barrels a day. It's not huge. Is it the beginning of a new trend, or is it just another repeat of April and like this logistical friction that Moscow will work around, and then next thing you know, they're back up to, previous levels? I think, very frankly, no one knows. I think everyone's been caught blindside. I think a lot of people have been right on certain things, but I think a lot of people have also been wrong on very big factors here. I think it's important to stay humble in this kind of environment, particularly when we're not in a normal market environment. We're in an extremely politically and policy-driven market. It's being driven by the capriciousness of Beijing's COVID policy. Now it looks like Beijing is reopening, or that Beijing is reopening the economy, that they've abandoned COVID zero. Will this stick? It seems to be the case so far. I think it's from a, call it bullishness on Chinese demand kind of direction. You think that, it's a positive that Beijing is not yielding on its pivot away from COVID zero, despite the fact that, yesterday this morning or yesterday, I saw a stat that was like 70% of Shanghai has now been infected with COVID over the last month.
Right.
Wild.
Yeah. So to pause, let's stay on Russia for a second.
Yeah.
So you had this initial shock. We thought maybe 3 million barrels, and then it was a couple 100,000. And then, the reality is it takes time for people to change these things. It's just like you can't just shut everything off, especially, some countries in the East were like, hey, this is a great opportunity for us to buy some cheap crude. Maybe they absorbed some of the stuff that was easier to, stop getting from Russia. But certainly like players in the West and Europe and other areas, like they can't just in refiners, you just can't like stop, on a dime and say, hey, look, we're no longer going to completely take this crude. And so it takes time to percolate through these markets. And to your point, it'll be interesting to see into the future as this becomes the new normal, where Russia is kind of like, no longer in the same status that it was in the markets, particularly in the West. How does that ripple through? And like you said, nobody really knows, but it doesn't seem like the war in Ukraine is going to end anytime soon. Maybe I'm wrong. I mean, it just seems like it's just kind of dragging on, and a lot of entrenchment there. But like as people start to adjust, it seems like moving forward, Russia is not going to regain that status. And what do you think some of those implications are with the natural buyers of this crude? Does it reshift and realign these boundaries in terms of who's allied with who and who's buying the products from Russia? Or just like, I know you say you can't predict what's going to happen, but what are some of the fundamentals of the dislocations that it's causing, and what adjustments are people having to make that typically would have just been a buyer of these products?
Yeah, I mean, part of it right now is benefiting from the fact that demand has eased off comparatively, right? So I
Right.
think there's less general demand for it in the first place. You have seen, and I think when you look at the longer term, I think the longer term pinch, like at this point, we're still talking mostly sanctions restrictions, self sanctioning, insurance and price cap restrictions, et cetera, which is why I think that there still is. Like, if it wasn't for all of this, would China still be importing more than they were, at least theoretically, in December? Probably, because they were importing that before. So it's a question of like, is this a new normal for them? Are they going to stop, or are they just waiting to see how enforcement works out? Are they waiting to see how they can get, finalize the paper on a new tanker fleet or insurance, supply chain or whatever else? There's a lot of options for how this stuff could resolve itself. I think if you look at the physical reality in Russia, I think the longer term question is, what is the result of, the other thing I should note here, that while we did only lose kind of like call it a couple 100,000 barrels a day of Russian supply versus kind of pre-invasion levels, remember that Russia was actually on an expected path of continuing to increase supply as you wound down the OPEC plus deal. So Russia is now, call it upwards of 2 million barrels a day below what it should be producing under that kind of OPEC quota negotiation. Now, that quota itself was probably overly generous to Russia in the first place. But I think the important thing is when you look at the pre-invasion forecasts from like OPEC and EIA, et cetera, they had Russian production continuing to rise. And it's not only not risen, but it has actually fallen, albeit by a small amount. Going forward, I think this longer term question of like, how do you get Russian production? How do you maintain Russian production, let alone grow it, without the benefit of Western oilfield service companies and the kind of expertise they bring, particularly to a lot of the legacy Russian fields, the loss of capital and expertise from the international oil majors that left, thinking, Shell, BP, Exxon, et cetera. That I think is still this longer term question, because sure, you could, likely what you're seeing right now is you're seeing, advice and service and capital being provided, let's say, from Beijing or Tehran, but these are not the same as a Baker Hughes and a Schlumberger and a Halliburton. So it's a very different kind of thing we're talking about. When you look at historically what Russia has done, let's say in the Soviet Union, there was that example that like, Soviet Union production actually held up better than everyone's expecting. It was only because they were like water flooding their wells. So like they were damaging the long-term capacity of the reserves in order to juice short-term production. I don't know if that's happening today. It could be. Part of the challenge is we actually don't know a lot of what's happening on the ground. We don't know the reality of exactly, where that 1 million barrels a day of production was lost in April. We don't know, how they got it back up to those levels. So there's a lot of stuff we don't know. So we can just kind of infer along the edges here. We know what's coming out of Russia. We know kind of where it's going. But to your point, like, it's hard to shut this stuff off and turn it back on typically. If people stop buying, theoretically, they do need to shut in wells. And then that makes it, even harder and harder and harder and harder to restart without all of that kind of supporting service and expertise and capital infrastructure.
Yeah, that's good. Love the nuanced answers. It's a good way to put it, because some of these experts around this stuff, they want to make it seem very black and white, like, hey, we're going to lose all this production, and once they shut these wells in, it's over, and this is happening immediately. And it's like, nah, actually, there's.
I mean, on that, I think it's like I historically, I think, have been more certain on this. Like when wells are shut in, it's hard to restart them. But they shut in upwards of 1 million barrels a day in April, and then they turned it back on. And people forget, obviously, that they had shut in a bunch of production for the OPEC plus cut, and they turned it back on. So like it's never black and white. And I'm sure you'll get some comments that like I'm a wishy-washy kind of like, idiot let it, yet intellectual, or whatever the phrase is. Right. But I think that I approach this like with a lot of like humility, that like it's one of, if not like the largest industrial market on the planet, with some of the biggest players in history. Like, yeah, we're not going to nail all this. And I think the best we can do is kind of hopefully tilt people and kind of, tilt the narrative, if you will, or tilt the discussion towards what we think is more probable. and away from what's less probable. And I think at this stage, at least, it seems less likely year on year that we're going to see a collapse in Russian production. But I think that same kind of trend from even before the December 5th threshold was like probably they were going to have challenges maintaining that production level indefinitely without all of the supporting infrastructure and services. I think that's the trend we're heading down, but it's probably going to be bumpy along that way.
Yeah, for sure. One interesting thing I read, and I don't know how much you've looked into this, no one really knows, but just the risk of, we've seen what Ukraine has done with like these infrastructure attacks now, like with the attack on the bridge. And I don't know the exact name of that city. I'm not an expert. I always been trying to get better at learning all these places in Ukraine and what's going on. And every time I listen to a podcast or something, I have to pull up a map and try to follow along with what's going on. But read an interesting article and watched some videos the other day about some of the drone technology in Ukraine now that in theory they could strike some of these critical Russian infrastructure assets within Russia. I just wonder, like, as this war drags on, have you, from what you've read or the research you've done, do you think there is a risk that Russia critical infrastructure could be targeted, or is that just beyond your pay grade from a geopolitical risk standpoint? I mean, it just seems like Ukraine's got to do something. Seems like it almost kind of plays to their benefit the longer this drags out. And I just wonder if some of these assets could be a target, or if that is a risk that's out there, because Ukraine's got to do whatever it can do. And it's clearly they've shown that they're willing to attack critical infrastructure. So I just don't know if that's something that's serious or just something to get clicks, because I watched a few videos that made it sound like it could happen.
I think it could. I think when you're talking about like there's a huge range of possibilities in war, given the very, very existential nature of what we're talking about. I wouldn't fault kind of Ukrainian forces for thinking that way. And you have seen, I mean, it's really hard to tell exactly what who is doing what everywhere. I mean, there's obviously been like these massive debates about like who blew up Nord Stream, which is like still a debate. I personally think that the most likely candidate was Russia itself.
Sure.
I think lots of very, very confident and loud people disagreed with me. And there was that piece in the Washington Post a couple of weeks ago that basically like acknowledged that despite the collective efforts of Western intelligence agencies to pin on Russia, they haven't found any damning evidence that it is Russia. So I think it's a huge question as to who blew up Nord Stream. It's obviously less of a question who blew up the bridge to Crimea. But I think it's, there's obviously things happening, and beyond the explosions and the attacks on Nord Stream, you also have a bunch of various explosions, sabotage, facility failures within Russia itself that I think people have either, the theories I've seen is like, it's clandestine Ukrainian activity, it's clandestine Western intelligence activity, it's clandestine Russian domestic opposition to the war and to the Putin regime. Very frankly, I mean, to your point, I would say mostly above my pay grade, but I think that, you can't ignore empirically the fact that there are increased risks to Russian export infrastructure, particularly when it's, in and around Ukraine. I think you just have to, and like that will be things like the Druzhba pipeline and things like, all of these traditional, large strategic pieces of infrastructure. Now, on the flip side, I think there are a lot. I mean, it's probably less of a concern now that you have had an increased EU embargo and divestment from Russian supply. But, one of the arguments for why Ukraine wouldn't be as kind of keen to do that is that it, risks blowback from people that it hopes to be its allies. That, this natural gas or oil is going to countries that you actually want on side. So in many cases, Ukraine probably wants something like the price cap. It wants its allies to be happy and fueled, but not too much money going back to Moscow to fuel the war effort. So I think it's very complex, and I think it's very political for Ukraine as well, while it's trying to both fight for its very existence, while at the same time trying to maintain a political alliance and coalition of support that's going to continue sending it financial and kind of military equipment aid.
Well, and like there's some counterintuitiveness to doing it as well. Like if they attack supply and supply goes down, what happens to price? Price goes up, which then means Russia is enriched from the higher prices. And then I've said it for a long time. It's like, if you want to target Russia, and the best thing we could do is to bring on a lot of supply, and then that would, cause price to be depressed, which therefore brings less revenue into Moscow, and makes their coffers refill slower. And so it's like, okay, well, yeah, you attack some infrastructure, and then the price shoots back up to 100 and something dollars a barrel, and it's like, is that really achieving the goal? They're selling less barrels, maybe. They can always repair that thing that broke or that was attacked, and then in the interim, they're making more money. So it's kind of like, to your point, sanctions or price caps, or whether those will work or not, but just the natural progression of things to a more stable and a moderate price environment probably does quite a bit to harm Russia, anyways. But so let's move on to to China. It's been fascinating to watch. The zero COVID policy was, in my opinion, a huge head scratcher. Yes. And there is like tons of like conspiracy theories swirling around it. It's like, why are they doing this? Seeing these videos of these massive lockdowns and really just trying to figure out, what's the end goal here. I'm not going to get into the conspiracy theories, but it looks like we can follow what's actually happening. And it does seem like COVID now has spread. Things are going to have to reopen. I mean, like China just,
like, they effectively have reopened in many cases, right? I mean, like, you're seeing simultaneously massive infection rates, overflowing hospitals, all the stuff you would expect from a massive wave of a respiratory, virus like COVID. Well, at the same time, you're seeing massive crowds around Christmas. You're seeing, a spike in subway traffic coming out of Christmas and the New Year. Like, you're seeing both things happen at once, which in many ways is exactly what you'd expect to happen with a massive reopening. But I think it's important to I think a lot of people, I saw someone kind of say the other day that like they should have done this from the beginning. But I think that's too simple, right? I think actually in many cases, China was really resting on its laurels that COVID zero in many cases, while awful on a human basis, had actually allowed China to resume kind of normal life well before the West ever did. And they had for a long time kind of said like, aha, we figured out the answer. This is how we do it. And I think that was a large part of why they stuck to the strategy well after it obviously lost its efficacy. Because I think COVID itself changed over the past 3 years. From Alpha through Delta, et cetera, these were much, much more deadly waves and much less contagious than Omicron has turned out to be. So what really killed COVID zero is the fact that Omicron and the subsequent subvariants, I honestly have no idea where we're at in the alphabet now. But all of these, the main theme has been less deadly, more contagious. So when you have that, the upside of COVID zero decreases, while at the same time the cost of maintaining it increases because it's so much harder to contain. So I think I mean I heard a theory that that a big reason for the trigger, and again you have to acknowledge that China is not a democracy, and increasingly it is not even a collective. It's like a single human being driving majority of policy in China in Xi Jinping, and that Xi Jinping himself got a relatively mild case of COVID. I believe it was in October. This is something that I haven't looked into tremendously myself, but again, to this, with China, there's a lot of conspiracy theories. So like maybe Xi Jinping himself got COVID and was like, oh, well, this isn't bad. Let's reopen. I'm like, there's a bunch of theories here, but I also think that like there were the protests that happened around that time. I want to say it was like late November into early December. All of this happened together, but I think fundamentally COVID zero was not maintainable with COVID in its current iteration. I don't think that necessarily means that they should have done this from the very beginning 3 years ago, but I think it seems at this stage now that the cat's out of the bag. What I had there were, even 4 or 5 weeks ago, I wrote about how I was increasingly skeptical that they were going to go through with a complete reopening, that they were going to completely abandon COVID zero. I was wrong. The reasons that I and many others believed that to be the case and that you were going to see a lingering of COVID zero in China was a combination of the fact that you had very, very low natural immunity in the country because they had maintained such low case counts for a very, very long time. The hospital infrastructure was deeply insufficient for and I think that has been proven true. We have seen hospitals literally overflowing. And the final point is that you had seen, and this is the point that like for the past 2 years before 2022, the Chinese government believed that COVID-0 was a raging success. And that they increasingly tied themselves to the success of that policy, and not just the Chinese Communist Party, but Xi Jinping himself. So for those reasons, I thought it's unlikely at this stage that they're going to pivot away, at least abruptly, that it's going to be something that's going to be slow and gradual and kind of like messaged and massaged. And the kind of comparison that I thought a very good comparison, at least it made logical sense to me, was something like the one child policy. That for decades, people were like, this is completely untenable, if and also extremely anti-human and cruel.
Yeah.
They're going to abandon it. But they held on to it for like years, if not like a decade longer, that after everyone kind of proclaimed that to be truth. I thought there was a strong case to be made that COVID-0 was going to follow a similar pattern. It doesn't always need to be logical for it to make sense to the Chinese Communist government. But that obviously did not turn out to be the case. We had a massive pivot in late November, early December. You have initially had those 20 points and kind of a bunch of subsequent things that have happened. But now they have not changed their stance, their opinion of how to manage this crisis, or that they are going to reopen, despite the fact that hospitals are literally overflowing. There have been some truly like hair-raising articles that have been published in the past few days about like how there's literally a run on Chinese crematoriums, that the death rates are so high that people are fighting to get in line. They're paying premium to get in line to cremate loved ones. We will likely never know how high the human cost of this reopening is, because there's an obvious kind of incentive to never reveal the true death counts or even the true case counts. The case counts we have gotten that are like 30 million people infected in a single day, hundreds of millions over the past couple of weeks, have been leaked from internal minutes in meetings, but nothing has been officially confirmed. And I think that will likely continue to be the case. But I think the fact is, the hospitals are overflowing, the crematoriums are packed and overflowing, and Beijing has not changed course. I think that is likely your sign that they will not change course now. Now they've changed the narrative. Now they've defeated. We're victorious over COVID. Move on. Next thing. That can happen with Chinese policy, which is why for a long time, I can't count the number of times that I have said that China will not lean again on its historical stimulus measures of heavy industry and real estate stimulus, that they've learned their lessons. They're trying to deleverage. They're trying to transition the economy, etc. And what do we see coming out of this? Oh, well, they're easing real estate standards again. They're sending more money to the sector. At the same, it's all flippant and capricious. And when China moves, it moves in a big way. What's interesting to me right now is obviously crude and risk assets are getting absolutely smoked. I'm looking now on my screen, Brent is now below $79 a barrel. So fresh, year-to-date lows on Brent. Obviously, the market right now is not buying that this is going to continue. Maybe they're becoming skeptical of what we're seeing. We had seen a big build back up of speculative sentiment in crude contracts over the past week or so. The last week going into the new year. Maybe that's liquidated again. I'll know more when I get the data on Friday. But I think this is the kind of thing that it's going to move, starkly, and I think that's what we've seen. I think anyone that believes now that there's no risk of another stark move is fooling themselves. So I think while the base case is likely moving towards, China's reopening, we're going to see something, like that. Who knows? If the worry has always been, one of my worries has been when you have rampant case counts of COVID, that is the kind of environment where you do see, definitionally, mutations in the disease. You could see a problematic variant emerge. I think that would change Beijing's calculus pretty quickly if the death rate dramatically climbed. Not saying it will, but it could. And I think that's, again, we could end up in a situation where, once again, we're expecting Russian supply to fall off and Chinese demand to boom. We could end up completely, flat-faced on that thesis again. But I think that, again, that is the base case thesis. But I think that everyone should just be very wary of confidence in this kind of environment.
Absolutely. No one knows. What about by the numbers with China, just some of the fundamental numbers, where things are at demand-wise, where they could go, where they've been, but I'm not up to date. I don't track that stuff as closely. I know you do, but just kind of some of the numbers around these possible scenarios.
Yeah. So on my numbers, Chinese demand fell off by about 2 million barrels a day between, call it January and February of 2022 into April. It lost about 2 million barrels a day. I also saw a similarly low number, and that was about 13.8 million barrels a day for demand in April and again in August, which actually in many cases point ticks the kind of two lower periods of pricing in the year as well. So that lines up. You did see a mild recovery in the summer, and then you did see kind of another decent sized recovery into September and October. I think the last data I have officially is an estimate for October. That should be updated in about 2 weeks now for November. But on that number, you had already seen a decent sized recovery in demand. The hard part about this is that China doesn't release official demand statistics for petroleum products. So everything we're talking about and all these numbers are what we call implied demand or implied consumption. And the way you calculate that is by taking the official numbers of production. So how much diesel, how much gasoline, et cetera, has been pumping out of Chinese refineries, and kind of add to that net trade. So whatever kind of net imports of that product are. In some, that's there's a positive net import. In others, there's a net export, and that kind of adjusts through. And then you kind of come up with a total liquids balance for the country. We don't have a lot of visibility on inventory, so that's usually a bit of a delta, and that can throw things as well. But what we have seen right now is that there's an expectation, and we've already seen that China has dramatically increased refined product export quotas, so they can now refiners can export more fuel into the year, and everyone knew this was coming. We knew that there was going to be some easing. So part of what we could have seen to the end of last year was actually not true domestic demand, but instead essentially stock building of these petroleum products ahead of that surge in export quotas. So again, it's going to take time to work through, and that's why China is always a bit of a what's the, an enigma wrapped in a riddle or whatever it is. I think that, Chinese demand data is really sketchy. So the best we can do is it's always hazardous to be like, okay, that's exactly this much. Because we know we're missing. We have a bunch of known unknowns. We know what we're missing in the model. So there's always this bit of variation. But I think that can only be true for so long. You can't build inventories infinitely. You can't, build inventories for export infinitely. Eventually you will see the exports. Eventually you will see that normalize. So that's the expectation right now. I think that demand likely didn't fully recover, as my kind of estimated numbers show. I think we're probably in truth below those numbers, and that we will see more demand into this year. Now, I think there was an interesting debate that raged all over Twitter over the past week from Pierre Underand, who put out a chart kind of showing trend growth or trend oil demand. And that when you think of economists have this idea of potential output in the economy or potential GDP. And that typically what happens is, inflation is caused by when, GDP, actual GDP exceeds potential GDP because you're moving faster than the capacity the economy can allow, et cetera, et cetera, et cetera. And when you have a big recession, you're actually going to have, above trend growth rates as you reapproach that trend level, because that's going to keep chugging along for a whole bunch of reasons. What, Underon's chart showed, and I think it's, we have seen this historically again and again and again, is when you've had big recessions, demand has raced back up to kind of reach that previous, trend level. And that's because, people are still growing richer. You're still, people are growing in their flying demand, their flight demand and travel demand, et cetera, et cetera, et cetera, et cetera. The question is, does China not just re-reach pre-COVID levels, but do they ever re-reach the pre-COVID trend? Because that becomes not just a question of 1 to 2 million barrels a day. Then we're talking 3, 4, 5 million barrels a day to re-reach that trend. I don't think it's going to be as quickly as that kind of very simple level chart is going to indicate, because other things have changed in China over that time. You've seen China has plowed ahead on electrification far faster than a lot of the rest of the world. So that will probably erode some of it. But they're not electrifying, flight. So, and we know that flight levels are still really low. So as that begins to recover, you're going to see a pickup in jet fuel demand. You're going to see, while we still have seen, U.S. domestic flights recover quite nicely through the pandemic, international flights are still relatively, international travel is still relatively weak, and jet fuel demand is still relatively weak relative to that pre-COVID trend. And I think not only do we still have barrels to regain of, jet fuel, or in this case, kerosene demand, that segment of the market was also the fastest and steadiest segment of growth in the market pre-COVID. While you had gasoline was all over the place, diesel was all over the place, jet fuel was this seasonal, nice trending upward chart, and it had been like that for like a decade and a half. If we regain that pre-COVID trend, that's extremely bullish for demand. Now, and I think part of the market believes we will see that. If we see a flatlining, or we don't see a resumption of that trend, or we just see sort of gradual growth from this new lower level, that's far less bullish, and we're going to need far less supply in order to kind of satisfy that. So you've got these huge, even going into 2023, we have these huge questions around like how much supply can U.S. shale really supply in this environment? Even excluding cash flow discipline and everything else, are the supply chains there? Can they support, 1 million barrels a day of crude demand, crude supply growth again? A lot of people say no. Is this time really different? Yeah, I'm not yet convinced. I think many people have counted U.S. production out historically and surprised the upside. I'll never kind of undercount Americans' capacity for overinvestment during times of exuberance. And I think that if we do get an environment where you have like $150 crude, I think it's going to be really hard to maintain that cost discipline. And eventually, I think service sector is going to reinvest. You're going to see capacity grow in, pressure pumping and fracking capacity again. But that's what needs to happen. And we likely need higher prices to get there, and higher prices for longer. So I think it's, we always hear, and I was in a debate just before, that, this is a new normal. We're never going to be able to produce what we were before. We're never going to be able to reach X level of supply or demand because there's not enough of it. Big shorter of that general thesis, because price solves all. What level at what price? If we had $200 a barrel of crude or $250 a barrel of crude, I think you're definitely going to see more drilling and more investment in the United States than you are right now at 75, or wherever we are right now. Yes, below 75 for WTI. So I think, it just requires high prices for a longer period of time. The last 2-3 years through COVID have felt like warp speed. Like everything is happening so quickly and so volatile. I think it's really hard that like we feel like prices were really high and we didn't see a supply response, but they really weren't that high for that long. If you look back to how high, like prices were high, like above $100 a barrel with the brief break of the financial crisis. But between like 2008 and 2014, you had like a 5-6 year period of really high oil prices that essentially spurred the development of things like the Canadian oil sands and, massive build of supply of things that we now view as economically suboptimal or unattractive. But, price changes that. And I think it's not a simple price reaches X and we then drill. It's like price reaches X, lingers there for months. The narrative changes. Now we have a new, this time is different narrative, and then people lean into it. But I think that it's still way too early to kind of say for sure whether or not, demand won't continue growing at a pre-COVID pace, that supply won't be able to recover to where we were before, that you won't be able to reach these numbers. Because I think it's just, tell me at what price, and then I'll tell you where I think the rest of that stuff's going to go.
It's a lot of good stuff. The plot thickens. A lot to think about. So moving back to the supply side, because you kind of took it there, we touched on the SPR earlier. Just thoughts on how big of an impact that really had this last year. We released quite a bit of barrels. Historically, certainly it was a big release. And then your thoughts on into the future. You said they're doing a pilot program. Sure. I have a hard time seeing this administration, voraciously buying a lot, depending on where it goes. If it gets cheap enough, maybe they will. But just your thoughts on the SPR. You touched on it earlier, and then we'll move into the supply picture, OPEC, and in the U.S.
I will honestly, unfortunately, need to pop off in about 5 or so minutes.
Okay.
But we can wrap up on the SPR.
All right.
Extremely strong thoughts.
let's do SPR. Quick thoughts on OPEC,
right.
And we'll end it there.
Perfect. So on the SPR, I think I am less skeptical that they will continue, that they will refill it. I think that the Biden administration acknowledges that there is a large contingent or large constituency of people, both voters and in the policymaking public, that believe that the SPR has a national security or kind of like ultimate line of last resort function.
Sure.
I don't necessarily agree with that. I don't think that's the main purpose of it, but I think I can acknowledge that this is the policy space and that we do need to kind of compromise with various constituencies. So I think that there is, all else equal, a bias to having the SPR more full than more empty. But I do think that, what we are going to see is a tendency, and hopeful here, that you will rebuy on low, and not just low price level, but when the curve is in contango, when you're seeing clear signs of oversupply in the market. My hope, and again, this pilot project it's the first step. I think, again, this is all new, and we're saying things are moving fast. Policy doesn't move as fast, unfortunately. So I think we do need, again, time for, the SPR has existed for, 40 plus years. And for the majority of its entire, like, people have worked there their entire careers and basically sat on it's like a dragon sitting on a big pile of gold. Very rarely does it ever move. If you shift to a whole new paradigm where you're actively engaging with the market, that's going to ruffle feathers. That's going to have a lot of friction at the policy level. And I think that it's still taking time for that to work out. And I think that, I think there's a theoretical argument for a much better managed SPR. I think it's still a question of if it can, nail that landing given those frictions. But I think it's still too early to say because it's going to take time to work those out. But that's all I'll say on the SPR, and then we can quickly shift to OPEC production here, and then I will have to jump off.
Sure.
But on OPEC, I think, so what you've seen fundamentally is when OPEC Plus finally finished its production cut, and when it theoretically returned all of its barrels to market in August of last year. So that cut was 9.8 million barrels. I still hold that they saved the market and saved everyone from a much harder, harsher, more volatile time. But by the time the quota cuts returned to zero, OPEC Plus was still holding back. They still failed to return upwards of a third of that total cut. I think it was like 3.25 million barrels a day that never returned to the market. Now, a good chunk of that was Russia, but even if you exclude Russia from that, 2 million barrels a day of production that had been cut back did not return when it was planned to be in August of last year. So that's mainly between Nigeria, Angola, Azerbaijan, and Kazakhstan. Between those four countries, you had, that was a huge chunk of what was missing from what never got returned. Now, a big chunk of that is, again, prices were low. Production was shut in. People weren't investing in maintaining that capacity. You had all the rest of the COVID logistical stuff that was happening at the same time. It made it difficult. So no doubt that OPEC Plus today has a much weakened production capacity backdrop than you did in 2019. For most members, I think the UAE has continued to invest, and I think they're one of the members that can use to chafe against, having quotas at all. So they want to produce more. I think Saudi can probably also produce more, but you have seen a huge chunk of the rest of OPEC Plus that has been kind of like, not like mortally wounded, but like seriously hampered in their capacity to fuel the market. That will likely, and like if you had returned all 9.8 million barrels a day of production through August, we would have had an even more oversupplied market. Like you actually didn't have the market scope for all of that to return. So good thing it didn't from the perspective of oil bulls, right? Going forward, I don't see any fundamental reason that needs to shift. I think if you had much higher prices for a much longer period of time, yeah, people would, international oil companies would get back in Nigeria, get back in Angola. You would see investment there. But right now, it doesn't seem like a hugely attractive option. And where you are seeing a lot of the growth now is in countries that have, at least ostensibly, more friendly regulatory and governance environments. I wrote a piece last year on Guyana. It's a major offshore production growth center. You're going to see a lot of growth in Brazil. I hope that we see more growth in Canada. And while the U.S. is still fundamentally growing at probably half the pace as it was before, it's still, multiples growing faster than the next fastest source in the world. Like US is still number one in terms of supply growth. And that doesn't look like it's going to change anytime soon. If it does change anytime soon, then the entire global supply side is in, a whole whack of trouble.
Yeah. That's good. Well, we'll leave it there. I respect your time. This is great. Super dense, knowledge-filled episode, Rory. Where can people find you? How do they check out your work?
Yeah, so I'm on Twitter at Rory_Johnston, and you can find all of my work on Substack at commoditycontext.com. And I've got, both kind of free summaries of all of my work and bullet points, as well as kind of a paid option for people that are looking for like much deeper, kind of longer form exposition of this kind of variety.
Well, thank you so much for coming on and making the time. If anybody else, I saw there was a couple comments, we can't get to them. If anybody has any questions or comments, drop them in a reply on one of the tweets or on YouTube or one of the other channels, and maybe we'll get to it another time. Rory, let's do it again in the future.
All right. Thanks so much, Max. Talk to you later.
All right, thanks.